Guys, Credible Crypto here. It is February 8th, about 9:30 a.m. Pacific Standard Time. Um, First off, I am still a little bit sick, so if my voice sounds a little bit off, that's the reason why. The last video update I made on YouTube was made about a week ago on the 29th of January. And since then, I have been posting regular updates, shorter term updates on both Twitter and Discord. However, I did not make a YouTube update for the last week or so because everything that I had said in the prior video was still happening as expected, and there wasn't really much to update. A few days ago, or if you guys recall from my last YouTube video, we were hoping for one more leg to the downside at 3,200 if this level didn't hold. This level did end up holding, and we did see our bounce that we've been expecting for weeks now. I did have some, as I mentioned on my Twitter, I had some non-leverage longs filled in the 3,300s, and I got 2 of my 5 laddered longs filled on this final spike to the downside, and I had 3 more orders that didn't get filled down to my second green zone here. But that is why we always ladder in, guys. Ladder into your positions, because there's always a chance that we bounce earlier than expected, so you always want to have partial positions filled. And rather than placing your entire orders in one location, such as down here or up here, you'll find that more often than not, it's better that you ladder your longs. So have 5 separate orders, for example, layered down into your final target zone, so that even if you don't hit your final target, you still do get filled. And this is something that I tend to do when I believe a larger move is approaching, and that there may or may not be a chance that I get my ultimate optimal best entry filled, and in this case it worked pretty well. So if you guys have been following me on Twitter, then you are already familiar with the way that we are counting this move to the downside. If you guys are on YouTube, then this will be some new information to you. But basically, based on the development of the leading diagonal, as I was initially calling it, based on what I was seeing, determined basically that this is most likely actually not a leading diagonal based on the final price action that we saw here to the downside, and came up with a different count for it. If you guys are in my Discord, I made a separate video explaining this already, but if you're not, then the count the count is something like this. Oh, not that, sorry. Basically, it's just a more complex combination of a correction. The actual price targets were exactly the same, so there wasn't really a need to update you guys as far as the price targets went, because they were literally the same. A couple of days ago, before we had our final move to the downside here, we had made this move here, and we were going up like this. And I told my followers on my Discord, now there's 2 possibilities here. Basically, what I was seeing, guys, to explain to you what I explained to my Discord group earlier, is that we were making what I believe to be now, instead of a leading diagonal, just a complex WXYXZ correction. And basically that we had finished this X wave to the upside here, and we had made a 3-wave move to the downside instead of a 5-wave move. And that's kind of one of the major reasons that tipped me off to this not being a simple leading diagonal, is because of this move right here. Instead of a 5-3-5 that we should have got for a leading diagonal, we got a 5-3, and then we made a 3-wave move to the downside, followed by another corrective move to the upside. So that told me that this 5-wave move to the downside was actually most likely part of a prior structure and not part of a 5-3-5. So that made me think that this 5-3-5 was actually the structure that this 5-wave belonged to as a C-wave, an A, B, C, and that this move up was a X-wave on its own, and that we would have one more 3-wave move to the downside because we had a 3-wave leg here. So we got a 3-3-3 to the downside for our Z-wave. And I told my Discord followers that there's 2 possibilities here. One is that we sweep the lows here, get an SFP, a swing failure pattern, which is clearing the lows of this candle and then wicking back and closing above the prior lows. That's called a swing failure pattern. And basically it's a move below prior lows to take up the liquidity that are in the form of stop orders here before pumping up higher and closing above and then reversing to the upside. So that was one of the options that I said could happen. And the second option would be that we break these lows and we make a move to my second green zone. So I did have orders filled right as we broke these lows, and we swung up and closed above it, so I got some long non-leveraged longs filled there, and like I said, I got 2 out of 5 of my orders filled, so I did have more orders stacked below here that never got filled. And at this point, I'm looking to buy the dips because I believe, I mean, very clearly our bounce has now started. What this means for the bigger picture, it doesn't mean too much, guys. If anything, it's positive news that this wasn't a leading diagonal. If this was a leading diagonal, it would limit our upside to no more than 4,240. Based on Elliott wave rules, a leading diagonal either comes in place as a wave A of an ABC, or it's a wave 1 of a 5-wave move to the downside. And what that means is that if this was our leading diagonal, then our B wave, or our bounce that we're seeing now, could not go above the start of this A wave, which is 4,240, right? If it was a leading diagonal and it was the first wave of 5, our second wave can't go above our first wave. Again, 4,240. So either way, leading diagonals basically capped our upside at 4,240. Now, the fact that this looks more likely to be a different corrective structure means that there is no cap to our upside. And it means that this could have just been one larger ABC, right? So that's actually positive news for bulls, right? That this means that our upside isn't necessarily capped at 4.2K. Ultimately, I think that this is just a bounce before we've hit new lows. That hasn't changed. But what has changed is that I think our upside potential has increased because of the way that this move ended up playing out. So that's what I'm seeing now, guys. Right now I'm looking to add on the long or add on the dips with initial levels of interest being around 3560 to add some longs, and then below that around 3500. As for Ethereum and LTC, they are also making drastic moves to the upside. Let's see, Ethereum here. Ethereum also making strong moves on massive volume to the upside here, guys. And Litecoin is actually leading the pack. As you can see, made a very strong move right up into our resistance here and is now rejected, but I'm sure it'll continue up. So basically, bottom line, guys, is the bounce that we've been talking about, that I've been talking about for weeks now, has finally begun to play out. If you guys filled some of your longs in anticipation of the bounce, congratulations. And if you guys haven't yet, don't FOMO, wait for the pullbacks, and add on the dips. That's all I have for you guys on this particular update, and I'll be making another update in more depth on the bigger picture once I'm feeling a little bit better and my throat is cleared up a little bit. Alright, I hope you guys enjoyed the video. If you did enjoy it, please like and subscribe so you can be kept up to date on all future updates, and follow me on Twitter. Alright, thanks guys.